How's it going, investors? Ari Gutman here with the TipRanks team, and that's all I really have to say is what a time to be alive for an investor. I mean, we've seen it all as of late, from the market rallying weeks ago to now some of the lowest lows that we've seen this year in 2022. And this is all now based on the fact that more volatility is expected as investors are fearing a costly recession on the horizon, which is why today I'd like to talk about 3 stocks that are considered to be recession-proof and rated buys on TipRanks by top analysts. So without further ado, let's dive right in. So before we go any further, I just wanted to take a moment to actually define the term recession-proof that's been thrown around more rather recently. And according to Investopedia, recession-proof refers to assets, companies, industries, or other entities that do not decline in value during a recession. Now, value is the key word, given a stock share price is not reflective of a company's true value, but actually what the market is willing to pay for it. Therefore, as we see stock share prices plummeting, it's now more important than ever to keep your calm, and if you're going to invest at all, just be sure the company's value delivers so you ultimately make it through the recession, if we are in fact to find ourselves in a recession. Now, with that said, our first stock has not only been operating for over 130 years, but experiencing growth while revolutionizing the industry with leading pharmaceuticals and advanced medical devices. The company I first want to talk about is Johnson & Johnson, which I'm sure you're very familiar with, but in talking about a recession-proof stock, Johnson & Johnson comes in with a smart score of a perfect 10 on TipRanks and only continues to thrive over the long term despite the economic conditions it faces during near-term volatility with its $429.50 billion market capitalization. And while Johnson & Johnson is not exactly immune to the market volatility, with the stock having declined nominally by 2.89% on the year, trading for around $163 per share. Now, we also see continued buying activity from investors across TipRanks. And even more of a positive indication is the amount of hedge funds that are pouring money into Johnson & Johnson as of late, despite the company coming in with a PE ratio at 23.7. Now, perhaps price is really just what you pay, while value is what you're actually going to get at the end of the day. Now, looking ahead, analysts foresee almost 15% worth of growth for Johnson & Johnson, coming up to a target share price of $186.67 per share. It may take some time before Johnson & Johnson actually picks up the pace to that share price, and therefore investors should take note of Johnson & Johnson being a dividend king, reliably paying those dividends for over 50 consecutive years, increasing them year over year, with a current dividend yield at 2.66%. Next up, while many investors are flocking to McDonald's or Chipotle, I'd like to bring Darden Restaurants to your attention, given their current valuation and what appears to be a wide moat around the business. Now, Darden Restaurants is a restaurant operator that was founded in 1968 and has since grown a brand portfolio of 8 popular franchises, from Olive Garden to Longhorn Steakhouse, Cheddar's, Yard House, Seasons 52, Bahama Breeze, Eddie V's, and the Capitol Grill. With such popular brands underneath their operation, Darden Restaurants has been able to amass a market capitalization at $15.48 billion. And while the stock is down on the year by a little over 12%, trading for $126.32 per share, this may sound the bells of opportunity for Darden Restaurants to add to your watch list. Now, its PE ratio is coming in under 20 at 17.52. That's considerably lower than its competitors. Now, at the end of the day here, it's worth noting Darden Restaurants has seen tremendous growth when it comes to website traffic this time last year, which is an indicator of earnings that may come in stronger than expected, and of course the business is still intact. Now, in that same token, hedge funds are pouring millions of dollars into Darden Restaurants as well, and so too are retail investors across TipRanks, with many investors adding or growing their positions with Darden Restaurants. As for analyst expectations, there is growth expected with a target share price coming up to $137.60 per share. It's 8.93% worth of upside potential for shareholders of Darden Restaurants, and until it actually hits that target share price, we can kick back to collect on a dividend yield coming in at 3.49%. And finally, if you're really looking to get your hands on a recession-proof stock for your portfolio, think about the companies that are manufacturing items consumers like you and I would have to buy regardless of the state of the economy. Think about care and grooming products, which brings us right to Procter & Gamble, a consumer goods company that has been dominating its industry since its founding in 1837. That's 180 years worth of navigating through market swings and delivering returns to shareholders, given dozens and dozens of products of theirs that are just necessities to us all. Whether it's toothpaste, laundry detergents, diapers, shaving creams, skincare products, or any and all of the above, consumers will continue to consume those very products from Procter & Gamble, which is why they have been able to amass a market capitalization of over $300 billion. However, like Johnson & Johnson, they too have taken a hit on the year, currently trading for $126.25 per share, which is down by a little over 21% on the year. Now their PE ratio is coming in at 21.8, which of course could always be lower for a better buy-in price. But some might say that it's worth the premium for the safety. Now their current share price has not stopped investors across TipRanks from increasing their position with Procter & Gamble, as we've seen increased buying activity from retail investors. And more interestingly to note, of course, is what smart money has been doing, which you could probably already guess. Hedge funds have also been buying in and investing more into Procter & Gamble as well for longer-term safety. Now, as we await the economic recovery, we can remain optimistic for the future of Procter & Gamble, whereas analysts foresee almost 24% worth of upside for shareholders of Procter & Gamble, with a target share price coming in at $156.25 per share. As we await that economic recovery, we can rely on Procter & Gamble's dividend, which comes in at a dividend yield of 2.77%. Now investors, there you have it, from Johnson & Johnson to Darden Restaurants and Procter & Gamble, 3 rock-solid stocks that are known to be recession-proof. Now we'd certainly love to catch your thoughts on any or all 3 of today's batch of the analyst-rated buys, so drop all those comments down below. And if you yourself have been out there buying and doubling down on certain stocks that are considered to be recession-proof, we'd love to know which stocks those are as well, so be sure to mention them in the comments. Now of course, today's video was not intended to be stock advice, but merely a means of showing you through some of our TipRanks tools so you as an investor can make more informed investment decisions. Now until next time, thank you for tuning in.